Hi there, and welcome to another episode of TokStocks Deal Flow. And in today's episode, we're going to talk about gold. We're going to talk about the physical metal, and we're also going to talk about gold equities or precious metal equities. Why are we talking about this now? Well, I'm sure inflation is at the top of your mind, and if it's not, it really should be. We're seeing accelerating inflation. Some people think that we've hit peak inflation. I don't think so. I think we got a lot more to go. And if you're looking for a hedge, you're looking for something to sort of hedge. Well, traditionally, historically, precious metals and gold have been a great place to be. So we're going to walk you through a couple of points. But before we get started, why don't we get the housekeeping out of the way? So here's our disclaimer, the fine print. As we say all the time, this is not investment advice. This is for information purposes only. This is not a solicitation to buy or sell securities. I have probably made errors in this presentation. And finally, please do your own due diligence. Now that we got that out of the way, why don't we jump right in? So a great account for you guys to follow on Twitter, someone who talks all day, every day for years about the gold sector, precious metals, is the Gold Telegraph. It's a Twitter account at Gold Telegraph _. Anyway, here's a couple of recent tweets where it really kind of talks about why gold should be top of mind, why it should be something that you're looking at from an investment to round out an investment portfolio. One of the tweets the other day, gold's trading at all-time highs against the euro alongside the Japanese yen. Currently, many fiat currencies are breaking down against gold worldwide. Another one, the Federal Reserve balance sheet has hit an all-time high, has hit new all-time highs this week. Again, when the money supply is increasing, when they're printing money, when they're expanding that typically is devaluing the dollar. And because gold is currently valued in US dollars, it typically means that the price of gold is going to go up, which means it acts as a hedge against inflation. Here's a chart from Sprott. Sprott in Canada and in North America are known as being like the granddaddy of gold investing, commodity investing. It's Eric Sprott is one of the most prolific investors into gold and gold equities, and so his firm here put together a chart, and it showed how gold has performed during some of the crisis. So if you go back to 2008 and the global financial crisis, gold bullion was up 26%, whereas equities, as we know, they fell dramatically. If we go back to 2010 and the Eurozone crisis, the flash crash, gold was up 5%, whereas equities were down 15%. If we go and move to 2011 and the U.S. sovereign debt downgrade, gold's up 8%. Anyways, as you can see, gold has definitely performed quite well during moments of crisis when equities have not. When people are looking to pare back risk and they're looking for what we call a safe haven trade, a popular place to be is in gold. So when is gold typically performing well? It performs well during high inflation. It performs well typically during rapid rising in money supply. That's something that we've had happen globally because of the COVID crisis. It's also continuing to happen with the Russia and Ukrainian crisis, with the governments committing weapons and aid packages, means that they're continuing to print dollars, print money, print currency, expand the money supply. And typically gold also performs well during falling interest rates. Well, we don't have that right now. We actually have dramatically rising interest rates. But I think that gold's holding up quite nicely here, knowing that interest rates are going to continue to climb. And I suspect that they're not going to be able to continue to move interest rates up all that much without putting us into a major recession. So if gold's performing quite well and holding in quite well as they're raising interest rates, imagine what may happen closer to the midterm election in the U.S. if they start trying to ratchet down the interest rates again in order to spur economic recovery. Then if it holds up well while they're raising, the price should dramatically rise while they're dropping interest rates again. Anyways, we shall see about that. So how does gold typically perform during inflationary periods? Well, when we have low inflation, it does quite well, 6.4% average annual return. And when we have high inflation, that's greater than 3%, we're certainly there. Some estimates indicate that we're sort of anywhere between 7 and well over 10%, double digits in real inflation. And during high inflation periods, it definitely performs very well. 15.4% is the average annual return or increase in the bullion, the price of gold bullion. So here we have got a really interesting chart. What happens when you put the gold price against the increase in global money supply? And as you can see, they follow along, and there's a correlation there. As you expand money supply, as you basically devalue global currency, because gold, again, is valued in the US dollar, it typically rises in price. If there's more dollars for the same amount of gold, you're increasing money supply. It just means that it's going to take more of those dollars in a devalued basis in order to still buy that same sort of ounce of gold. If we look at the 20-year returns of gold versus other key assets, if we look at real estate investment trusts, if we look at U.S. equities, if we look at hedge funds, if we look at U.S. bonds, if we look at cash, if we look at just commodities on their own, you'll see that since 2001, gold has had an average annual return of 11.2%. It outperforms all but two of these key asset baskets. So again, something to sort of keep in mind here during this time of the economy and what's happening with inflation. So how do gold stocks perform as compared to gold bullion or the metal? Well, if we look at this, if you look at gold mining stocks or mining stocks versus the actual metal itself, you typically find that the equities outperform. They have more leverage, as you'd say. So if we look at these two periods from 2000 to 2011, the price of gold increased 525%, but gold equities increased almost 700%. If we look at the last period from 2015 to 2020, the price of gold only went up 80% over that period of time. However, equities went up over 200% during that same period of time. So what we're going to talk about today, we've laid out the foundation, we've laid out the case for gold bullion. We've laid out the case for this stuff when you buy the actual sort of physical metal. But we're also going to lay out a bit of a case, and we're going to talk about an executive who's founded some companies that have done really well and give you a good idea for you guys to do your own due diligence. So in summary, just a couple of reasons why gold's something that we want to talk about now. If you believe that the U.S. money and the global money supply is going to keep increasing, then yes to gold. If you're concerned about the value of fiat currencies, about what's going on, the different sort of crises that are going on around the world, inflation, food, health, security, war type measures, all sorts of stuff, economic sanctions. If you're concerned about that stuff continuing and actually festering and expanding into other countries and other regions in the world, then yes to gold. If you're seeking an inflation hedge, then yes to gold. Do you think that the increasing interest rates that we're seeing are only short term? Do you think they're actually going to have to go back again? If you think that, then yes to gold. Are you concerned about digital currencies? Are you concerned about cyber attacks and government regulations? If you're concerned about those things and you want something tangible, then yes to gold. And are you concerned about expanding global geopolitical politics? Are you concerned about what's happening in Ukraine? Are you concerned that we haven't had peace or peace deal yet? And seeing this thing continue, it looks like it's getting worse before it's going to get better. If you're concerned about those things, then yes to gold. So that brings us to one idea that we wanted to bring you. It's called Fury Gold Mines. It's listed on both the New York Stock Exchange as well as the TSX Big Board up here in Canada. It's under the same symbol, Fury, on both. What is it focused on? It's focused on high-grade gold in politically safe jurisdictions within Canada, both within Quebec and Nunavut. So we're going to walk you through just briefly a little bit of an overview. As always, when we're looking at these equities and what to put in our portfolio, we always invest first in the jockey. Who's running the company? Who's the management? Who's the founder? And for Fury, the founder and the chairman of the company is a gentleman by the name of Ivan Bebek. And what has Ivan done in his career? He's a pretty young-looking guy, but he's had a pretty storied career. He's really known as being kind of an uber mining executive, a tremendous founder who really drinks his own Kool-Aid, invests heavily into his own projects, has a Rolodex like no one else, knows a lot of the major players, big funds, big institutions, famous investors. So he's absolutely amazing in being able to source capital. And he's provided a couple of tremendous returns and exits for shareholders. First one being Keegan Resources. If any of you guys know Rick Rule, very much in the Rick Rule camp in terms of Keegan. It was a big favorite. So he got started with the company just under 50 cents, over $9 a share. The other company that he founded, Caden Resources, a little bit more recent, it was actually taken over. He got an exit on that company, started at about 67 cents, got to about $3.50 a share, just under $3.50, able to provide significant return to his shareholders. And so he's added again here with Fury Gold Mines. Why don't we give you a little overview on the company? So if we look at the stock, we think that it's in a bit of a breakout. It's something interesting to sort of have a look at. On April 13th, we added it to our TokStocks virtual portfolio, which you can find at the Yahoo link. You're going to see the link at the end of this presentation. It's breaking out over the 50 and 100-day simple moving average. It just closed on a strategic financing with two investors, $11 million at 80 cents a share, no warrant, very bullish. And they recently began a 15,000 meter drilling program at one of its advanced gold projects in Quebec that already has a resource. It's already got very high average grades, and they drilled some interesting holes that they reported on last fall. They were very high grade, some of them bonanza, over bonanza grade. We think that in this type of market, this type of gold market, if a company is going to drill on high grades, they're going to expand on a known resource. That if they're successful in their drill campaign and they announce those results, we're starting to see resource stocks run on drilling results again. And with these guys focused on grade in a friendly jurisdiction, we think this has a lot of leverage and has an opportunity to really move. If we look further into the company's got about $60 million today worth of stock in Dolly Varden Silver, DV on the venture. And they've also got nearly $16 million worth of capital now when of cash since closing on that financing. So they're very well positioned. They've got a lot of assets on the balance sheet. And why don't we walk you through a little bit on their project portfolio? So the two main ones that they've got are Committee Bay and Nunavut. It's got about 1.2 million ounces that averages over 7.5 grams per ton, very high grade. And then over in Quebec, they've got a project there that's got about 1.3 million ounces. It averages again about 7 grams per ton. It's actually got a PEA that was done in 2018, and that's the project that they're drilling on right now. If we look at the deposit, you can see there in the 3D model, might be a little blurry for you to see, but if you look at the circles that they've been able to get the proposed drill holes, and they're drilling extensions and gentle step outs of some area where they had some very impressive drilling that they announced on last fall. They encountered over 7 meters of over 23 grams per ton gold. If they're able to extend off of that or drill below it and show that there's continuity, and an extension and show that this thing could get bigger, wow, watch out. This stock could have a lot of leverage to the upside. So how do we play this company? It's already public on the TSX and the New York Stock Exchange. We added it to our virtual portfolio April 13th at 87.5 cents. We're looking to add a bit more if there's any short-term weakness in gold. It is sort of breaking out above its 50 and 100-day moving average, so could be an appealing time. It's got drilling underway where they're drilling on a gold project that's got combined about 1.3 million ounces at an average of about 7 grams per ton. They've got $16 million in the bank. They've got $60 million worth of public securities. And they've got, as a portfolio, about just over 2.3 million ounces of gold, which again averages about 7 grams per ton. How does that relate compared to like the average grade of production of gold mines around the world? You're typically looking at an average new gold mine that's something slightly over a gram per ton. So for these guys to have those type of grades, these would typically be underground mines. That's in a gold market. When gold equities move, you're going to have senior gold producers, you're going to have junior gold producers, and then anything on the exploration side, advanced exploration, you typically are going to focus on high grade where there's a sizable deposit, and Fury's got 2 of those. The market cap is just 117 million. So if you strip out cash, they're not really getting a ton of value for those advanced gold projects. Again, we think that we think that there's a lot of leverage for upside there. And management, as you know, has delivered in the past, stuck with things, put their own money in, has an amazing Rolodex of the who's who of the industry. And so in Ivan, we trust. Just to walk you through a few of our other precious metal stocks that we've recently added into our TokStocks virtual portfolio. You can see the link there. The Yahoo link is at the top on the right. Since March, we're up about just under 17% on these 4 stocks. K92, which is a low-cost gold producer. Silvercrest, which is a silver stock. Mako Mining, it's a new gold producer. And then we got a streaming company, Wheaton Precious Metals. Just on those 4 stocks alone, since we added them to the portfolio in March, we're up almost 17% on an annualized basis over 12 months. That would be 145% average annual return. And how are we doing in our overall sort of TokStocks Deal Flow portfolio of stocks that we've talked about, ideas that we've talked about on this channel? Since March, we're up 7.7% on the entire basket. You can see in the red circle there that we've highlighted the annual performance so far. We're outperforming the general market, the S&P. And on an annualized basis, it's nearly 70%. So obviously, I think we've been picking some ideas to bring to your attention that are also performing. So what are your favorite stocks? Are there any other commodity stocks or precious metal stocks that we missed? Can you let us know in the comments? Anyways, that brings us to a close for today. So thank you for your time. Thank you for watching. We really enjoy putting these together and bringing you great ideas. Please send them our way. Please make sure you comment below this and name your favorite stocks for us to go have a look at, and maybe you'll see yours featured on an upcoming episode. Anyways, until next time, happy investing and be well.